In this video, I'm going to reveal my secret trading strategy that I've been using to get profitable trades for the past month. This trading strategy is going to change your trading game. If you have not become profitable before, by using this trading strategy, you might just become profitable. Before I get right in, please try to like this video, and I encourage you to watch this video from the beginning to the very end because this is not the kind of video that you want to miss. So this secret trading strategy is called mitigation block, and I'm going to explain how to identify mitigation block in the chart and how mitigation block works. For mitigation block, there are two types. We have the bullish mitigation block and the bearish mitigation block. And what you're seeing on your screen is the bearish mitigation block. For you to be able to draw the bearish mitigation block, you need to be in a bullish market. The price needs to be going or breaking structure to the upside, as you can see. And for the bearish mitigation block, it means that you want to set the market to the downside. You get for you to be able to do this, you need to see an uptrend. Our price breaking structure to the upside, as you can see right here. So you can see price went to this particular create this high, then retrace me to create this lower high at this particular place. Then retrace me to create this low at this particular place. Then price went up to create this particular high and break structure to the upside. Then price retraces but creates another high, but this particular high is unable to take this other high. So when you are trying to identify a mitigation block, this particular eye that is going to create should not be able to take this previous eye. And so the other block candle, which is the previous red candle before this is possible, you need to draw the candle out, like draw it out. Yeah, I believe you should be able to identify other block. So once price give this particular swing eye that is unable to take this previous eye, draw the other block out yet and wait for price to pierce through, like to break that particular other block. So the next time price we trace it back to this particular place, we should look forward a selling opportunity. This is simply what a mitigation block is. A mitigation block is simply an other block that price pierce through. Yet before price pierce through, price creates a high which was unable to break the previous high yet. So once price pierce through, you should be expecting price to trace it back to that particular other block to fit other block yet before selling. It's really very simple. So for you to get this, I think I need to draw this again. So for you to get a bearish mitigation block, the market need to be in an upward trend. Which means market to be breaking structure to the upside yet. So one market create this particular swing high, what is it looking for? So market to retrace yet, then create a particular swing high that is unable to take this previous high yet. So once market create this particular swing that is unable to pierce this previous high. So all you need to do is simply what? You need to simply draw at the other block candle, which is a red candle here before this particular upward movement. So once you mark the other block candle at this particular place, so let me fill this candle with green color so that you guys can see with red color because it most probably be the red candle. Yeah, it's going to be the red candle before the possible movement. So what we'll be doing is very simple. We wait for price to pierce through this particular other block candle. Once price pierce through, we should expect price to come out to this particular other block. Once price comes to the other block, we know that price will be going down. So we're looking for opportunity for us to sell. So this is just what it simply means. Mitigation block. Mitigation block is simply an other block. Again, it's simply an other block that price appears to reduce this. So a mitigation block is very simple. It's seen in either an uptrend or a bullish trend. If you see in an uptrend, it is called a bearish mitigation block. So that means when price creates a high, it causes retracement, and there was what? And there is create another high, which is this particular place. But this one is unable to take, it is unable to take this previous high. Yet it's called a lower high. It's unable to take this particular previous high. Understand? So when price pierce through the particular order block that creates this particular high, which you know that price is going to trace back to this particular place. And when price does that, you're looking for a selling opportunity. This is what is called what a bearish mitigation block. It's called bearish mitigation block because the O at leads to us selling the market. Understand? While for a bullish mitigation block is very simple. The bullish mitigation block is in a downward trend. So normally we should see price breaking structure to the what to the downside, criticism of lower low and lower high. You get. So when price creates a low, you get when price creates a low that's unable to take this previous low, you get it's able to take this previous low. What you need to do is simply what is just necessary to mark what the other block candle, which is the previous green candle at this particular place. Since we're in a downtrend, so we're looking forward the previous green candle before price make the impossible move downside. You need to mark out that particular candles at the other block candlestick with the previous green candle before price create this particular or down moment. So the next time price retraces or price pierces this particular other block, yet we should be expecting price to do what? To trace it back to this particular other block before moving to the upside. So it is still very much you see what it is still very much you see what we see is just price creates a lower low yet then create this particular low which is unable to take this previous low, right? Then we draw this particular order block, where the order block candlestick at this particular place. So when price pierce through the order block candlestick, we expect price to what? Retraces back to into this particular place, they will look for a buying opportunity. So this is what we call a bullish mitigation block. It is really very easy. So it is kind of similar to a breakout block. Yet, so if you don't know what a breakout block is, I recommend you watch my video that's going to share on your screen for you to know what a breakout block is. And if you don't know how to identify an other block, I think I made about 3 videos that explain how to identify an other block. So you should be able to identify an other block before you can make use of this 3D strategy. Okay, so the next is for me to go to the chart and show you guys how to identify this. Okay, so this right here is an example of what a bullish mitigation block. Mitigation block simply means what? Simply means reduction in impact. Yes, but I don't like explaining a lot of things. What I prefer explaining is the concept and identifying it in the chart because this is the most important. So right here you can see that price breaks structure to the downward side, which means that price break this particular low and break straight to the downward side. When price did that at this particular place, you can see. Okay, let me use this particular tool. Price breaks straight to the downward side. When price go to this place, there's a retracement, and this place it creates this particular swing low. You get, and this swing low is able to take this previous able to take this previous high. So what you need to do is simply draw the other block candlestick. You get the other block candlestick will be the previous candle. Let me move this red line, this yellow line rather. The other block candlestick will be what? Will be this particular green candle that create this downward movement. So if you draw it out, right? Draw it out. So what we should do was when price reverses, pierce through, I can see right at this particular place, price pierce through the particular other block candlestick is this, and you can see price retraces back in this particular place. And when price retraces back, what do we see? An upward movement. So guys, this is simply what a mitigation block is. It's really very easy. So guys, at this particular place, there's also another mitigation block in this particular place. So let me draw it out for you guys to see. At this particular region, right? This was a eye, and there is a retracement, but this is another eye. Yes, which face to take this particular eye. You can see right here, which take you to this particular eye. So what you need to do is simply draw out this the other block candlestick that create this particular impulsive movement. So and it should be this particular red candle as you can see. So you can see when price pierce through this particular order block candlestick, you can see that price retraces back into this place. You can see the tap info price decide to go out, before price decide to go down. So guys, this is another example of mitigation block you get. So I want you guys to go into the chart, into your chart and try to identify mitigation block as much as you can. You get try to identify mitigation block as much as you can. Luckily for me, I was able to find two examples of the bullish mitigation block and the bearish mitigation block you get. So it is really very, very simple. All you need to do is identify a structure you get that look like an M structure in that. So because what we did right here, these structures look like an M structure or like a W structure. For this, please always use a W pattern. This. You can see it right. You can see this, 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 this. This is a W pattern. Where price traces back and went up. So let's look for this particular pattern. So in a downtrend, what you should be looking at for it is very simple. So you're looking for price breaking structure to the low side, the lower side. When price create on that low, that's able to take this particular low. You get if you do add the other block candlestick, and when price retraces PS3, you can wait for price to retrace back to the particular place and you do what you buy. You can see this is W structure. Then for a uptrend, when price is breaking structure to the upside, criticism of higher highs and higher low. So you should wait for price to create a high, it's able to take this particular previous high, then you mark out what the other block candlestick that create this particular swing high that's able to take this particular the previous high. When price retraces or pierce through, if you're looking for an opportunity for you to see, because you know that price actually come back into this particular other block, you get which now called mitigation block. So guys, it is really very easy. I want you guys to go there, practice how to draw this art like I did, then go into the chat and identify as many mitigation block as possible. And guys, I want you to like this video. And if you're new to this channel, please do it to subscribe and turn the bell icon. I'll see you in my next video. Peace out.